Starting with the 10-year yields here, we on a weekly chart, we can look from the low here as wave 1, 2 here, 3 here, 4 here, and then 5 here. Now, we can also view it in fairness to have an ABC correction to the upside, the A wave, the B wave, and the C wave here, and then we come down from that point. And that's valid as well. I tend to lean towards it being a wave 3 here, and the reason for that is because of this third wave here. Because when you have a correction, most of the time you'll see wave A and wave C have some sort of equality to them, but in this case we can see that wave 3 is much bigger, or this particular leg is much bigger, and there is a really nice 5-wave structure here. It's got really good form, but at the end of the day, we still need evidence. We still need to prove that this is a wave 4 being played out here. And wave 4s can get a bit complicated. As it stands at the moment, it's reasonably simple in that the move down here would be the A wave here, then an A and a B and a C wave here for the B wave, and then 5 waves down here for the C wave here. As a wave 4, it can pull to the lower end of this previous wave 4 of 1 lesser degree, or to the 38.2%, which is the top. So coming down closer towards 3% would be about right, and that's the structure that we're in at this stage here. So as I say, I don't know which one is right, but I would tend to lean towards wave 3 being a little bit more accurate, carrying a bit more weight, should I say. There is, when I look around on one or two of the other markets, especially this move down through here on the Australian market seems to come down in 3 waves here. So even though it's a different market and all the rest of it, just these little subtleties across other markets can kind of suggest things. But I couldn't put something outside of the US in control of this particular market, because, well, I have to say the Australians haven't really lifted their rates as much as the US. They've taken a sort of a slower step, but the Australian economy, our GDP is like sort of 40%, not 120%, and it's a different thing at the end of the day. But we're all a bit of a dog on a lead to what happens out of the Feds, a bit of the blind leading the blind, I suppose, in one way or another. But I'll try and keep my opinions to myself. But if you can't enjoy yourself a little bit, well then. When you get old and crusty, to have a good old whinge is quite healthy to a point. Anyway, that's where that is. Right, so we've just been working through this for quite some time, and we'll continue to do that. All I can say is that if this is 1 and 2 and 3 and 4 and 5 up here, then that's going to be a bit frightening, because what will happen at that point is that we would get some sort of A, B and C wave over here at that point. It can pull back 50-60%, and then we'll get another 5 waves up. So that much I can tell you, but as soon as we can confirm exactly if this is a wave 4, because as it stands at the moment, this could just drift on down here as 1 and 2 and 3 and 4 and 5 and come back and everything's rosy again, and it's a beautiful thing. But yeah, we'll see. Okay, so I'll just take that out of the way. It brings us back to the US dollar. I think one of the interesting things here with the US dollar is that the current move here, I understand a fair bit of it, but I don't understand it as a totality just yet, and I'll show you where we're up to. But one of the things is that what's happening here is telling me that, not confirming it, but putting a fair bit of weight on it, that this move up here is a corrective pattern. Now, I haven't talked about that before, because this move down here is 5 waves. We could look at it as wave A, but when we'll look at the euro, dollar and the pound and the Australian market where I'm from, we can see that we've got 5 waves here in the opposite direction of this one here for the other markets. So it's likely to be wave 1 and 2. Now, this move to the upside here, it doesn't count as 5 waves to that top there. We can count it as an A wave here, a B wave here, and then 5 waves up here with a slight overlap between 1 and 4. So it doesn't tick all the boxes, but I have to say the weight of it is giving us the impression that this move up here is corrective. Now, we can look at it with wave 2 here, which we will, and we're done and dusted at this point, and there's a good case for that when we look at the Australian dollar and also the sterling as well, and that means that this can come straight down here from that point. But that's not confirmed yet. We could also put it back up here and have a move that would, this little move that's coming down here would come down a little bit further, and come down a little bit further into the 61.8% roughly, and then have 5 waves up here and then move down. But the simple thing is that because this is 3 waves here, an A and a B and a C to this point, then it makes it corrective at this point. It's not confirmed as corrective. It would really need to take this low out here, because I could still look at it technically as wave 1 and 2 here, and then 1 and 2 over here for this. So I really need to take out this low here, but the way the time that it's spent here, and we know that it's been lazy moving up here, it hasn't been, you know, a choice purchase for the big boys at this point. So yeah, anyway, we're going to look at it in 2 different ways. So we'll just go into I think 20 to start with at this point. Spinky watching YouTube TV. It's always on a doggy station for him. It's funny, some dogs can see the TV and others can't. Anyway, from here we're looking at an A and a B and a C for the A wave, and then an A and a B and a C for... I'll just put it on pause so I wasn't too excited. Okay, sorry buddy, you just have to chill for a minute. An A and a B and a C for the A wave, and then an A and a B and a C wave coming down here for this. You know, I can get 5 waves up to this point on this low here, but I'll go with this as the A, the B and the C here. So we need to finish off here, and we'll have a bit of a look at that. So we could come down to the, you know, make a new low here. We can see the stochastic sort of moving back here as well on this, so it kind of wants to pop. So it could do one of 2 things, and we could put wave 1 here, but it does count better as 5 waves down here, so that's why I'm kind of going with that side of it. But either way, we can't turn bearish in it yet. So this is a likely scenario that would suit the euro dollar, but would not suit the Australian dollar. You can have a look at the Australian video to see the Australian dollar. So yeah, that's where that is. The bringing wave 2 down to this point here would be, I think I've got it on this chart here, looking at it like this. A simple A and a B and a C for wave 2, down for 1 and back for 2, down for 1 and back for 2, and then moving down here further in that case. So to understand what's going on in here, this little bit here, we should take a look at that, and I think we're on 2Ks for that, or we could probably drill in a bit further. So I'll remove this wave 2 here for that. So we're looking at it as an A wave, a B wave and a C wave to here. Now we've got a little 5 wave structure here, 1, 2, 3, 4, 5. And then here we've got, probably, it's a little bit rough in here, but I would assume that we've got wave 1 in here, an A wave, a B wave and a C wave here. So we could just label this, because it could just push straight up from here as well. And then that would also be interesting for gold and silver at this point as well. So you've probably, if you're a gold silver trader, you would have noticed that. So here we've got 1, 2, probably all of the 3rd wave here. Maybe there's a low in here for this wave 5. Would there, can there be? Can't see in there. I'd have to go in further to have a bit of a look at that. Maybe we'll just go and have a look at that. But anyway, if we were going to go down for 5 waves here, then this is what it would look like here for 5C of B here. because otherwise I'd have to put wave 1 up here and have a look at this as wave 1 here, with an A wave here, a B wave right here, and a C wave tucked in right here for that. So all we're trying to work out, really, in a way, are we going to go up from here, or, you know, but even if we finish these 5 waves here, then we can also be wave 1 and 2. So it's still got to work itself into a corner a little bit. I just want to go into the, I don't know if I probably haven't updated it. We're in 2100, probably haven't, but doesn't matter. I'll just have a quick look. Okay, I have done a little bit here, so let me just come out a bit and have a look at that a bit closer. Just while we're here. Okay, so this would be the A wave, B wave, and C wave. I mean, I can get the wave 5 to here as well, so it doesn't really matter, but and get 5 waves up here, but this is 5 waves, 1 2 3 4 5, A B C here. Yeah, okay, I've got it as 1 here, an A and a B and a C for wave 2. Not the best C wave. That could be thing, but that's okay. So that's 1 2 3 4 5 here, so that's the 4th here, and then we've got the same thing occurring here as well. 1 A B C for 2, 1 and 2, 1 2 3 4 5 for the 3rd wave, 4th wave coming in here now. That's nice. 4th waves could get a bit more complicated as well. Probably an A and a B and a C up here for that, and then that will leave us a little bit. So it should work itself a little bit lower, because I can see that gold and silver need to basically make another little top there as well. But just to give you an idea here, you know, from this wave 4 here, 1 2 1 2 3 4, yada yada yada, down here, bounce off the 300, as always expect to bounce off 3. So that can take us back up here somewhere, 38.2% from wave 2 down to wave 3 here. And then we'll just see if we'll get, I mean, we're going to go step by step, but I think that we will get wave C of B here. And on the bearish picture, this can also be wave 1 here by the buy, and then we'll have wave 2 here, and that would satisfy the stochastics coming back too. We'll see how quickly that comes back. So it's getting itself into a corner here. That would also be, I'm going to label that a different wave 2 and 1 and 1 there. I'm going to do that a bit differently, so we don't need to label that wave 1 there. And if it's going to be bullish, we'll need a 1 and 2 up there as well. So anyway, that's kind of where we are. We're getting in, once we get into this corner, and once we know this, once we know, like I said yesterday as well, or the Friday, once we know this answer to this puzzle, then we'll know that we can go long on, you know, other things like the Australian dollar, which we are long on at the moment with the Australian dollar, and gold and those sorts of things as well. So if I was looking at gold, for example, I would have to say that this wave 2 here is right. You know, if I was looking at not so much silver but gold, if I was looking at gold, if I was looking at silver, I'd say this would be the count. If I was looking at gold, I would say that this is the count. Okay, so if you're bullish on gold, for example, then this would probably be the count here. So it's going to be a little bit interesting in that. So do we go to gold next? Yeah. Okay, so if you believe that gold's bullish, and we've been counting this one up, this is a weekly chart, we'll drill in a moment, but we've been looking at this as wave 1 here and 2 here, and then we'd look at this as wave 1 here and 2 here. But I don't know if that's correct or not, you know. It looks correct. Here we still need to push up in 5 waves here. So when this tops here in 5 waves here, just by the by, that means that this wave 1 here on the dollar down here is done. But it doesn't mean anything at this point, because, you know, maybe, you know, I mean, technically we'd be looking at having an ABC pattern here, pulling back for wave 2 here. And then we would look to go long at that point, you know, especially taking that B wave top out. That will be our catalyst at that point, and we'll drill into here. But this going long here would mean that this one here is going to be, you know, wave 2 is going to be correct here, and we're going to come down at that point. So we'll need to be short in this ABC pattern here. We'll need to be short on the B wave in here. I drew the wrong one here. So we'll be short on the B wave in here. So we need that to finish off. When that bottoms, this will top here. So let's go in and have a look at this top now, shall we? So let's just have a look on the daily chart. So this would be it here. We're looking for this. So in a nutshell, we're looking for something like, we're looking for that top, okay, and we're going to drill into that in a moment, but then we'll be looking at this pullback here, and maybe all of this is up for an A and a B and a C wave up here. It's more likely to be this 1 and 2, but the truth will be taking that B wave out here as an A and a B and a C here. So there'll be a moment of truth here in all of this. We're going to drill in closer and have a little look at this, but I just want to put the shell of the idea in place, and we'll still need a little ABC for that, but I won't chew you up on that. But you know, if this is going to be correct, then this will be a nice trade up here. This will be, you know, the third of the third here, and what we'll try to do in here is get another 1 and 2 in here to get the third of the third at that point too, you know. Let's put this in here a little bit closer. Come on, copy. Okay, good. And copy there. So we'll have the third of the third of the third, and we'll also be able to get another 1, 2 in here as well across this major trading level 2 here. So this could turn into quite a nice setup, you know. Not all 1, 2, 1, 2, 1, 2s play out here, so we'll need to be careful. And if it was going to be a bearish market as an A wave up here and a B wave and a C wave here, then we're going to have to be careful about coming down here. So there's a bit of work to do in here. We just keep drilling in until we get it. But let's go in further and have a closer look at this. I think we're on the 20k here. That will take us a bit in here earlier. Okay, so this is our wave 1 up here, and this is our wave 2 here. We have to look at this as wave 1 and 2 here, and then I have put a bit of effort into this morning checking this out. So it'll be 1, 2, 3, 4, 5 for the third wave, so 1 and 2 and 3 and 4 here, and then 1 and 2 here. And then this here is 1 and 2 and B 3, 4, 5 going up here. So this is the long trade we're talking about. So that B wave will be the long trade at that point. Look, at this ABC may not be that big at this point, but we'll just keep working on it. We'll need to be careful it's not a B wave up here and we come down over here for wave 2, something like that. It'll depend on the dollar. So we do need to be careful. We want a classic trading levels pattern at the $2. So we want this pattern at the $2 mark. It will be this pattern because we need the pullback at this point. It's unlikely to be this pattern here sitting square on the level, but of course we always keep an eye on it, but it's more likely to be this one. So that's what we'll do at that point. And yeah, I think we could go in here a bit further. Let me just check. I can't remember what other chart that I've done my work on this with. Maybe this is it here. Let me pull this out. Okay, yeah, this will do the job. So I've had that 3 and 4 here, and then 1 and 2 and 1 and 2, and then 1, 2, 3, 4, 5. So in here somewhere, so we can put that as 3 and 4 here and 5, and the third wave and the fourth wave and the fifth wave. So you can you can copy this and use it as a template, and then, you know, work out if I've done something wrong or not done something wrong. But whatever happens, I mean, it's pretty close as 1 and 2, 1, 2, 1, 2, 3, 4, 5. Nice third wave in here, isn't there? So there's going to be some sort of top here, but Point being, don't go long here. Don't think that you're missing anything, right? That's not what we're about here at this point. So we'll be looking for 3, 4, and 5. First high above the level, then the A wave, the B wave, and the C wave here. That can pull back 50, 60% at this point from here to here, wherever that top is there. I should really take it down a notch. Anyway, I'll leave it there. We'll just see. It'll be in group 1 of 2000 anyway. Well, not minor group 1. This is a major level. So minor group 1 will be 100, 200, which is $21, $22, and $23. But in the interim, we can look at this in a little bit of detail, which will be, well, we'll have, well, let's take it from the top here. So we've got 30 here. This will be our swing range. $20.30 and 20 cents and 10 cents in here, and then under this we're going to be going 80 and 72 roughly. That needs to go down a bit. I'll tweak it later. And 65, so I'll tweak that later as well. I will turn that one orange, and while I'm there I'll put in the right price in the box. So that's basically this will be our first swing range here. This is group 1 and group 2. So if I was trading this, I'm not, I'm in a gold stock, Newcrest Mining, but if I was trading this, I would trade to the level here and get out, and then I'd wait for the setup. And then I know that I'm not to make any decisions while I'm in group 1 here. The idea is really to allow the market to vibrate here. And if we can figure out that we've got an A and a B and a C correction here, or we get some lead on the US dollar, well, then we can build in on the first impulse wave that builds up here. Because we've got to be careful we don't get to here and go down. That's the trick. You know, we need to sort of see that we build up here, and as I mentioned, we'll need another 1 and 2 in here, so we can have this 1 and 2 in here somewhere. Could be a little bit different, of course. And then we can build in, so we can keep building in like this, you know, and then we could get another, you know, there'll be another 1 and 2 in here, by the way. You know, it may not be this pretty and it might be completely different, but this will be, you know, this is something that, you know, it's good to work to something, and then you can see how far you're out, you know. Normally I'm out by a long way and fuck it right up, but you know, what we're looking for is support on this level, and we're not going to know it's there. The trick to getting this right is just patience. You know, that's the solution, because at some point along the line you're going to recognize that that number is support and this market heading off higher here. Our job is to try to sort of figure out and scratch our navels and heads at the same time and try to figure out, are we seeing impulse waves over this side, you know, or are we seeing corrective waves here? You know, is that an impulse wave as wave 1 here and 2 here and 1 here and 2 here and going down? So really it's not until we get over here that we've got 5 waves here, and we want that 5 waves and a correction here to manage our initial risk and our exposure as we move in through here, you know. So there's a fair way to get from here to here. You know, unless we can get a lead from the US dollar or another currency or something, you know. But this is where we're at the moment with this, you know. Okay, so I will leave it at that for this. The thing with silver, by the way, it hasn't taken out this top here like gold has done, and that's okay too, but it does leave it in a situation where we can, you know, I can count 5 waves, 1, 2, 3, 4, 5 to here as an A and a B and a C, and then 1, 2, 3, 4, 5. I'm not that happy about that being an ABC correction, but it has pulled back to its, you know, where it should be pulling back to its box. It's, you know, and we can count up here, but still we need to look at it as wave A here with a B and a C wave here, or wave 1 and 2 and then 1 and 2. So we need to go through the same process as we're going to go through on gold as well. So when we know it on gold, we'll know it on silver. So we have to be mindful that we don't get a wave C down here for this. I think that we're okay, but we need to get past the black stump and know that we're on the right track there for that. Black stump is an Aussie outback thing. Yeah, I won't go into a lot of detail because it's the same spin I would give you as the gold, you know. So we just need to be a little bit patient on this. I think we talked about being long above here for this. So you could, if you went long here, then I should just put that in so we can talk about it. It doesn't. So I think we talked about being long here. So the initial stop will be here. The problem with this is that if this is 1, 2, 3, 4 here, and then going up for 5 here, the ABC pattern that can come in here can come back to, say, the 20, well, that will be the 61.8%. If it goes to here, that will be the 61.8%. So that's the risk at that point. So let's just say that if you're in, if you feel that you can't handle, because we'd have to leave the stop down here for this, really. I mean, we could bring it up. We could bring it up to this point here, but it's too close to the danger point there. You know what I mean? So what you could do is either take profit here, or think about taking, you know, 60% off or 80% off at that point. You know, and then with the aim of coming back in on the B wave here. So it's easier to manage a winning trade than to recover from a losing trade. That's my new motto. So I'll keep saying it for a while until I'm bored shitless with it and they start throwing stuff at me again. But that's it's true though, do you know, because you have a choice here, you know. You have a choice right here and now as well with this, you know. This is probably the wave 4 pullback in here. If it overlaps the top of this little move here, this move here, see here, if it comes back to 22, then you know that there's something wrong at that point and you'll need to get out. But yeah, it's done everything right. This is a corrective pattern. We should be taking the top out on that. We went long on the B wave here. We could build in over here, but we don't know what the dollar's doing yet. If we knew what the dollar was doing, then we could take a more serious position on the long side. But because I don't know, you know, you may know, or you may have some other sort of thing, but I don't know, so I have to say I don't know. Okay, enough waffling there. Over to, well, before we go to the energy sector, I want to go to just have a quick look at the, what's the names, the metals. Now, I don't need to spend much time on them because I do them with the Aussie. And look, the thing is that until we work out what the US dollar is doing, then you know, we're at risk with you know, there's nothing we can do here. You know, we're basically looking at, if I go to iron ore, because we looked at that before, and as I mentioned before with iron ore, we've either got wave 1 or wave C up here, and if it's wave C, we've got wave B here. And just to bring you in the picture, if we've got wave C here, we've got a big move coming down here for this, you know, if that's the case. Now, when we have a look at this, is Chinese here, traded in China. When we look at Singapore, because it might look a little bit weird to have wave 1 up there, you know, but when we look at Singapore iron ore, which we will right now, let me go to just the Australian market here for a moment. I can just bring it in here. See, when we look at the Singapore iron ore, just by the way, we can look at this as 1, 2, 3, 4, 5 down here, right? But then we can look at this as the A wave here, the B wave here, and the C wave here. So we're also counting this up in the same light as well. So just coming back to the iron ore here, this low here never made a new low like it did in this market. See how it made a new low here? So to have this as the A, the B, and the C here is quite acceptable. And looking at this as wave 1 is quite acceptable. So in this case, we're looking at wave 1 here, and we're coming back for we're hopefully coming back for wave 2 in some sort of little ABC correction here, and then head up at that point. So that's possible at this point. But yeah, looking at iron ore here coming back into this space here, there's a good case for having this as the A, the B, and the C wave up here and not wave 1. What I have been doing here, and I won't go there right now, but we have been looking at this as 1, 2, 3, 4, 5 in here. So we've, on an intraday basis, we've counted right to the top and called the top in. Now, last week you saw that drop, and you know that's a really good bar for you know, that weekly bar opening higher, pushing up, checking supply, and then closing lower. But it did close off its low, but Monday here it has, in Asia opening, it has dropped here, so it's giving a bit more credibility to calling this in here as a top in one way or another, you know, that we need to be pulling back here. So copper is a, you know, a bit of a Dr. Copper, as they call it. It's almost, they also say it's an inflation gauge as well. So maybe inflation is coming off. Yeah, I don't know, but I just know that, you know, iron ore stocks, we can't go long in. That's all I know. I don't know anything beyond that. And, you know, copper is kind of the same as well. You know, it could pull, we're looking at copper could be at a big B wave up here, coming back for a C wave here. So that's something that we've been looking at as well. So going into copper stocks here and looking at, don't have an index here for that. Oh yeah, we do, the US copper here. So this is the weekly chart here that we've talked about. So, you know, I can look at this in terms of an A wave here, a B wave here, and coming down for a C wave here, just like nickel is doing. So I've been looking at this here, thinking to myself, is this wave 1 and 2 here, and 3 and wave 4 here? It's pulled down past its 38.2%. I could allow another little low to come in. So I don't have wave 1 up here yet. Do you know what I mean? I don't have 5 waves from here to here. I don't have that. And I'm wondering if I'm going to have to put this here as wave B here. Are we going to, you know, is this market going to, you know, drop down a bit too deep here for a wave 4 pullback at this point? So that's what we've been monitoring at this point. And look, both are quite sort of valid at this point. It kind of also depends on the US dollar to a point as well. So, whoops daisy, I don't know where that went. Well, not sure where that went, but I'm just going to move on from that point then. And we're going to just delete that chart. And we'll just go to this one. I wonder why that's not, let me come back over here, try this one. This is the regional banking sector, just why we're here as wave 1 and 2 and possibly 3, 4, 5, but we could come to wave 3 here and go up as an A and a B and a C wave here. But looking at all this here, it doesn't really make a lot of sort of sense. So I think we've got something a little bit bigger than Ben-Hur in this one, I think. But anyway, that's not why we're here. We're here to have a look at nickel, and nickel is down here, and this is the Dow Jones Commodity Index here for this. So yeah, look, this is what happened with the Chinese and the LME. I wish they'd never sold it to them. But anyway, that's just another sort of thing. So this is a weekly chart. Obviously don't have it labeled, but we don't really have a nice 5-wave structure up here, but it doesn't stop us from having a larger A, B and C wave up here before coming down here either. Do you know what I mean? So just because I can count this as being corrective up here, one would think naturally straight away we need to count this down here as 1 and 2 and 1 and 2 and a third wave here and a fourth and a fifth and then another fourth and a fifth, and that would be it, having a C wave down here. And that's, you know, exactly what we've done on the daily chart here, you know, looking at it like that. So, you know, I know that lithium needs to come down further. It looks like copper may come down. We know iron ore needs to come down. You would think that the US dollar needs to push up from that point to help all of this push down. That's a possibility. We can't confirm that just yet, but we, you know, this is as 1 and 2 and 1 and 2 here and 3 a bounce off the 500 here or thereabouts, a couple of little bounces. You know, this has got quite some time to move down to finish this off here, you know. It's as simple as that. You know, we've got this little iron ore stock here in Australia, nickel stock here. I mean, BHP's big on nickel as well, you know. When they bought that other mob out, you know, I can't remember the name, in South Australia there, they were sending all their, that little mob was sending all their nickel to the nickel smelter in WA that BHP owned anyway. So now that BHP owns that, they can run their thing at full steam. But this particular market here, which is a bit of a Aussie favourite, we've got it as wave 1 and 2 here, and 3, 4, 5 up here. So the correction that it's had so far is still too small to look at all of that. I'll just put this here, and this will be the same for other nickel stocks around the place as well. So that gives you a better picture here. So we've got the A wave, the B wave, and the C wave here, then 1, 2, 3, 4, 5. So the correction here, as you can see, is just still too small. Do you know what I mean? We need to see we need to see something down to wave 4 here at least. And we'll have a look at what it looks like at that point. So it's still down. And lithium's much the same as well. Lithium stocks here. So so for the US one, I'm just going to use, we'll have a look at China in a moment, but I'm going to go with Piedmont here. This is a weekly chart. So one of the things that I understand here is that this move here as an A, B, C here is probably just the A wave, and then we've got an A and a B and a C for the B wave here. So I'm thinking it's going to come down with the others, test these lows down here at least, So we've got to kind of count 5 waves down here. Currently the move from the bottom to the top here is roughly at the 61.8%. So it's going to stall at the 61.8%. It's going to stall at that $50 mark there, all of that sort of stuff. But I think there's more to come for this. But the beauty about this is that, it's hard to count this as an impulse wave to the downside here, So this is corrective here. So yes, it can come down and nip out the low here. That's basically a good picture of lining it up with nickel and probably copper and probably everything else in that basket. In line with the banks, what's going on in the regional banks and also in the big banks as well. We've got all them pretty sort of bearish, and the S&P 400 and everything else. When you look at this is the finance sector here, the US finance sector. So we can remove that. So all of this here would be, this is an A wave here, a B wave up here, an A, B, C for the B wave, and then we're coming down for the C wave here. And far as I can see so far, this would all just be wave 1 here and 2, and then 3, 4, 5. I mean, I'm probably shorting that up, probably come down here further, but, you get the picture. This is all the big banks, not just the regional banks that we've been looking at, So we're short BAC, so once we get the bounce in here, we'll be looking to add to those short positions. But yeah, so this needs to come down further. So iron ore, so it could come all the way down here. It may just come back to the 50-60% mark here for iron ore, all of that sort of stuff, but bearish. So with crude here, crude's been coming down for a long time, so we can look at it in different ways. But here, as just, when this became obvious that it was a triangle pattern, then, wave 4s, triangles occur in wave 4s or wave Bs. So this would be a wave 4, and so that means that we need to count it as 5 waves coming down here. So we know that the US are going to start buying crude here, but it's not a simple matter of buying it at a certain price. Do you know what I mean? They have to negotiate deals and deliveries and all those sort of stuff. So I don't know if they would actually buy it at the futures market. and disrupt those markets. They probably do something on the side in some way or another. But anyway, apart from all of that, you know, their mandate was to buy at 72 to something, I can't remember now, down here somewhere. So it will bring in some support, but it'll also bring in, we can see that that's going to bring in support, because as wave 4 here and coming down to wave 5 here somewhere, what could happen here is that we either go all the way up at that point, or we just come back up for a rally. And it would probably, I doubt if this would actually just be wave 1 here and coming back for wave 2. It will probably more be like a larger wave 4 here, trying to push back up into this supply here and then drop at that point and then come down again at that point. I couldn't see it going up without the stock market, you know. But anyway, our job at the moment really is to count this down here, and I'm not that comfortable with the count that I've got here. By the way, I'm not that sort of happy about it. What I can say is that the $65 mark is what I call a medium level come to the trading levels. 7's important, 6 is important, this is more important. This is where these 7 will create the tops here and 6 will create lows here, but it will be there will be, the 65 will be a balance point, because we're going into a whole series of wave 4s here. Yeah, that will, it will be, we can use it to be long or short on in that case. But it's going to come down further, and this will be the area that it comes down into, $60. But how it gets there, I'm not quite sure with this. I'm having a bit of difficulty counting how this should be here. I haven't had a lot of time to ponder it, so if somebody's got a clear answer on that. I haven't even had time to pull this apart. I mean, that looks like wave 1 here and 2 here, then 1 and 2 and 3 and 4 and 5 here. But I need to pull this apart and really check everything in here for this, you know. I was going to pull this out to even one more move out here, but I didn't want to go too far out because of the third wave here. But look, all I can say is it's going to come down, bounce around the 65, and then eventually come down to this point. So if you want to hold it through all of that, that's okay. The first bounce is normally the highest. That can be something like a ball bouncing on the ground, and that's that. And then we go over to to natural gas. I thought that we had a good case for a low being in place, and yeah, I mean, I still need to go with the point that we've got either wave 1 up here or wave A up here, because this is a pretty good impulse wave here. I understand that this is a bit dodgy in here, but apart from that, everything else is like counting quite nicely as an impulse. So we still need to look at this as corrective here. There's probably different ways to look at it, but the gap here doesn't make it any easier. But I was thinking that, could we look at it as an A wave here, a B wave here, then down for 1, back for 2, down for 3, back for 4, and down for 5. Now, we could actually have another little move down here, because I haven't really pulled all that apart. But what I was thinking is that all we need to do now that it's traded below the level, all we need to do is just wait for it to sit on here and get a little classic trading levels pattern sitting back on the $2.50 area here, the medium level. So let's see if it does that. Can it, you know, move back up here and move down further? Probably. We could probably end up putting B wave over here and having 1, 2, 3, 4, 5 down here. So there's a couple of ways that it could sort of play out. But in terms of going long, now again, then we have to wait for this number here to become the support. Just because it gets back up to the $2.50 doesn't mean it's support, because we can look at this as 1, 2, 3, 4, 5. This one here looks a little bit shorter than this one, so that means that this last leg here will be shorter. So the bounce will come off 2, 3 at that point. It'll be a nice clean bounce off that, I would imagine. And then we have to rinse and repeat and then go back up again at that point. But either way, we need to find, if we're going to have a crack at this going long again, then we need to have this as a nice support over here for this. Alrighty, I'll leave it at that. Thanks for tuning in. Enjoy the week ahead. Cheers.